What up, guys, and welcome to the coffee shop. This is your host and barista, and in today's video, I'm going to give you guys a strategy that you can use on the 1 minute, 3 minute, 5 minute, and maybe even the 15 minute. Like, you can use it on those types of charts. This is really for you Forex traders that are just looking to scalp. So this is a really good scalping strategy. You're going to use two indicators, okay? That's going to be two indicators. It's going to be I'm going to give you a moving average that you're going to use, and it's going to be my version of the stochastic RSI. So the link for both of those indicators is in the description below. I don't want to get into like how to go get them. I just want to jump right into the settings for those indicators. So I want you to use the links below, get the indicators, put them on your chart, and then come back to this point in the video, and I want you to get them set up. So you're going to set up the indicator this way. We're going to open up the Stochashi, right? It's the correct Stochashi. There's two of them in my profile. The link goes to the right one. So the settings here are going to be 5. It's going to be 5, 3, 14, and 14, okay? You're going to want to show the strength, okay? Not the momentum. And you're going to want to see the candles themselves, all right? So I'm going to turn off the strength just to give you guys an idea of like what you're looking for, and then you'll see how the strength applies to these entries. This is going to show you where to get your entries using the stochastic and the position of price with your moving average, right? So we already got that, and let's put, the next indicator is going to be the zero lag multi-time frame moving average. The link for it is there. Add that to your chart. Now, I'm going to be using a 14 period moving average, right? That's what I want to see overall. It's going to be a 14 period moving average. It's not showing you 3 moving averages. It's showing you 1 moving average on 3 separate time frames. That's what this is doing, okay? So show your moving average, and then you want to look at your, show the high time frame and show the second high time frame. Now, once you turn all of those on, you want to make sure you go to your chart time frame in minutes, set it for 5 minutes, 15 minutes, and 45 minutes. What you're telling the script is that you want to see 1 moving average on the 5-minute chart. The next one, you want to see it on the 5-minute, but you're looking at the 15-minute version of it, right? And then you're also looking at the 45-minute version of it. It's like being able to look at other charts and indicators on other charts by looking at one chart. You don't have to switch around. So that's a really cool thing here, right? So you turn all of those things on, you set your settings in here, and then so you're good, right? Now, now you can see I have these arrows here. I want to show you why they're here, okay? And the arrows are really just representing the moving averages that are here, right? They're the same colors, right? Let me just kind of move them up a little bit so you can see everything in one little swoop right here. There we go. Okay, so you can see the colors of the moving averages, and I just want you to know what the arrows are referencing in this case, right? So that's going to be your current average, right? It's going to be the white one. The current trend is the orange one, and the support and resistance is the blue one, right? So we're going to do this one. So basically what you're looking for is, it's nice to know where your support and resistance is, okay? I don't care which way it's moving. I just want to know when price is getting near that one. So there isn't a whole lot to do with this one. It just becomes important when price gets near it. That's it. So I don't have to really talk about much on this one. But, and don't worry, we're going to get to the stochastic thing in just a second. So when your moving averages, your other ones, when they don't have to be specifically lined up. They can have an angle to them. They don't have to be the same angle as each other. They can be kind of inverted a little bit, whatever, it doesn't matter. You just want to know if they're both rising or they're both falling. And I'm talking about we'll call it moving average 1 and 2, right? Instead of saying current average and trend, okay? So we'll say moving average 1, moving average 2. We'll just do that for now, right? There. So when your price gets inside, let's get here. If your price is moving around and then it gets inside the 2 moving averages while they're moving up, okay, and then it starts to break out, you're going to notice something on the stochastic, right? The stochastic has a high side and a low side, right? When price gets in between the moving averages while they're, in a specific directional trend, the stochastic is showing you that price is simply using this area between the moving averages as liquidity. It's grabbing liquidity. Now, you have to be careful. Liquidity can either pull price or push price. If liquidity pulls price, then the market reverses. If liquidity pushes price, then you have a trend continuation. And that's where the Stochastic, Stocashi is going to come in handy. Hang on one second here. There. Okay. That's where the Stocashi is going to come in handy. It's going to show you that price is either being pulled or pushed. All right. So, like I said, price gets down in between the moving averages, and you're going to be looking at the Heikin Ashi candles on the Stochastic to be in the bottom, right? Because that's going to be your support. It's looking for support because these are in an uptrend. Now, if they were in a downtrend, right? If these were in a downtrend and price got in between these two moving averages, okay, then the Heikin Ashi candles or the Stochastic would have to be on its high side, right? But we're looking at it for being on the low side for now. Let's do this. There, right? So let's pop this open, right? So every time this is down here, okay, every time it's down there, price should be in between the moving averages. It's down here. It should be, again, in between the moving averages, right? And it's down here, still below zero. Like here's that midline, right? It should be in between the moving averages. Don't worry necessarily where that third moving average is until price gets right near it. Don't worry about that, right? So the other thing is, here's a very important part of the strategy. You cannot take this low move, like you want to take this move going up, right? You cannot take that unless the Stochastic has made a move down through the midline, okay? It has to swing all the way down through the midline, which means, right, if you have a low, then it came from a high. Look for the high, the most recent one. It has to be above zero. It has to come from a high above zero, go through zero, and make a low. So for example, here is a low. The high is above zero, and the low is above zero. It did not go through zero to get from one to the other. So this is not another continuation move. You don't take this. Let me find another one here, right? So right here, you have a low here. The high is here. In this move, it did not cross zero. So that is not the move. That is not, that's not an entry, okay? Your entry is when it high is above zero, anywhere above zero, like here, right? And here. You see how it crosses through zero and then starts moving long again? There's a short move here, but there is something in the Stochastic that will tell you whether you have the right kind of energy for a long or the wrong kind of energy for the long, right? So it's either light green or dark green. Dark green is a lot of energy. Light green is not a lot of energy, okay? So you could see here like what, as I've already explained, again, let's see. So I can already see like prices breaking down up here. It's breaking down below the moving averages. It went in between your first moving average and your second moving average are there, right? You can see right there. Here's an example. And I'm gonna break down the entire length of the London and New York session for gold future contracts today, right? I'm gonna do that. So you can see here's your first and second moving average. They are upside down, right? And then price pulls in between them, starts closing in between them, right? So that means you're looking for shorts. Why? Because your current trend and your higher time frame trend, they're upside down. You're looking for shorts. So that means you're looking to be on the high side, right? How did you get to the high side of the Stochastic? You got there from the low side and you crossed through zero. That means this should be a good entry for a short, okay? Then you get down here, cross above, right? And you should be looking at another short move, provided that price, right? Provided that price moved in between the moving averages. So if you look here on price, again, it moves in between the moving averages, and you have another short move here, right? So let me just kind of wipe all this out now, and I'll show you like what we're going to be looking for. So this is a really cool little trick, very easy to use. You just have to remember, did you get to this high or low, by crossing through zero? Now, the other thing you're looking for is on this Stochastic. This is why this one is really cool. It has this stochastic strength, okay? It is basically the energy in the histogram, all right? Now, I'll just pop this open again so you can see this. Strong bullish strength, weak bullish strength. All right, we're just talking about strong bullish and weak bullish. If it's dark green, if the histogram is dark green, you have a lot of strength. If it's light green, you do not have a lot of strength, okay? But it doesn't mean you're pushing against resistance. It just means you don't have the momentum, right? Now, if you do get this curve up, like you do here, but it's red above you, you are pushing into resistance. Do not take this trade, okay? So to take a long trade, what does that mean? To take a long trade, you need to come down from the high, right? I'm sorry. To take a long trade, your moving averages have to be right side up, first of all. So they cross above here, right? Your moving averages have to be right side up. Then price needs to pull back in between the moving averages. Let me kind of expand this for you guys here. Sorry about that. So price needs to close and try and get in between the moving averages, okay? Then once it's in there, you just need to see if you are crossing through zero, okay? You got this, you had a high here and you got a low here. But to get here, you did not cross through zero. You are not taking this long move. This is not the move, right? So you get another high here and you get a low here. In this space, did the price go in between the moving averages? Yes, it did. Right there, okay? Right here. Went right there. It went in between the moving averages. Here's the one moving average. Here's the other moving average, right? You're in between it looking for liquidity, right? And just out of respect to the moving average, you could see your high time frame, which is your support and resistance, and it's rejecting that moving average. So you have high time frame rejection sitting inside of bullish liquidity, right? And your high was here, your low was here, and you crossed through zero to get there. This is the move, like it is the move. Okay, you can't get better than that. You could, but you know, that's a different time frame. So anyway, that means once you get a green candle and you have notice the background here, it's dark green, not light green. This is your entry. You're going to be taking this trade from here, and that's the move you end up getting. Now, this happens over and over and over again. You simply need to know the very first step, right? Are you ahead of your moving averages, and are they the right way around? That's the first thing, right? You're ahead of your moving averages. Your current one is moving up, and the higher time frame, it's just starting to sit flat. Okay, that's fine. It's okay if it's sitting flat. It's going to start curving in one direction or not. You don't care about the the crossover. You're not concerned about the crossover. All right. Don't focus on I want a moving average crossover and then I want to find my entry right after. That's not how it works. Okay, because if you did that, you can be waiting a long time for another entry. So you pulled in between the moving averages. Wait for the stochastic to get down here and see if you pulled in between the moving averages again. If you did, that's your move, right? So continuing on, price comes up, closes in between the moving averages, right? And like I said, you want to find your lows, right? The swing low of the Stochastic has to be on the low side of the Stochastic after crossing through zero, right? So you get here, right? Look where you are. You got to a low. You did it off of a high. Again, you crossed through zero. This is another move for a long trade. Great. That's exactly what you're looking for. I'm going to find one that is not a good move. Like I said, I'm going to play this out. This is the entire length of London and New York session. These are the momentum moves that you want to be catching. These are re-entries into the move. Now, you can see that your moving averages are still lined up with each other. The first one and the second one, right? They're still lined up. You get this dip down over here. You get a low here, a high here. You cross through zero to get there. Did price go in between the moving averages in this space? Did it go in between the moving averages? No, it did not. So that means you have a end of your trend is coming. That's what that means. The end of the trend. If the price is not tampering with liquidity, then it is running out of momentum. That's it, right? It's just running out of momentum, hasn't grabbed the liquidity just yet. So moving on, right? So now you got a high here, a low here, right? Price in this space went in between the moving averages. Why don't you take this long move? Why don't you do this? Okay, look closely. Look, see? This high is not above zero. That means it went up, stayed below zero, and then came down. It needs to cross through zero from the high to the low. And when it does that in that length, it has to get in between the moving averages. If it simply makes a high below 0, it is no good. Just that simple. Just that simple, right? So now that means your divergence is starting to play out and you're losing your momentum. Exactly what's going on there, right? So the only way to take long moves at that point is you're going to start dropping down to a lower time frame or just use something else to find your entries. It takes, really small scalping moves. Now, you can see that you're losing momentum because here, right? Here you had a move and you had a dark green candle. You got, not dark green candle, but you had a dark green background, right? Also, you had a dark green background. But look what happens over here. You're getting this turn up with this not a great move, and you have a light green background. So even if you wanted to take this move, let's say it turns up right here, the background's red, okay? The histogram is red. You don't really want this move. You're pushing up, like I said earlier, if you get a turn up from a low, and the histogram above you, if that is red, you are pushing into resistance. So here you are pushing into resistance. You could simply say, hey, where's my resistance? I got this and this, right? I'm just having trouble getting above this previous high. I'm going to go to that closing value and I'm going to say, okay, I want to see what happens when price gets above this level. What's going on? Small candles, rejections. I get a break below, right? I'm still light green, but I get dark red on the way down, right? I get dark red on the way down. So that means you could start looking for short positions, right? You could start looking for short positions from this point. So, but this is the breakdown of the London and New York session. I showed you where you can get your entries on this one, right? I didn't show you the entry on this one. I don't think I showed you the entry on this one, right? Did I? High to the low? Maybe I did. We'll just, rewind the video and you'll be able to see it for yourself. But anyway, so a very simple trick for you to use on the Stocashi, right? The Stocashi plus Caffeine Crush and the zero lag multi-time frame moving average. Get them from the links below. You're going to be really happy with them. What I want you guys to do is I want you guys to use the comment section below I want you guys to use the comment section below to just go ahead and ask questions about settings, ask about the Discord, ask about different time frames, different assets to use. Go ahead and use that comment section below. That's fine to do that. You don't have to find me on Discord. You don't have to find me on the website and stuff like that. Let's keep it all right here on YouTube. And, we'll just see how kind of active we can make this, right? Also, I will be I'm going to be making the attempt to make a higher time frame version of the Stocashi, just like this, the zero lag already looks at high time frame. And yeah, so that's it. That's where we are. So I hope you guys enjoy this little strategy. Keep it locked right here to the coffee shop. And I got more strategies coming up for you. This is a strategy that I use. Peace.